it's not that bad. Otherwise, of course, it has been a down day. Trideep Bhattacharya, Chief Investment Officer, Equities at Edelweiss AMC, is our next guest on the show. Trideep, thank you for joining in. No, we will not ask you about Z, but actually come back to the rest of the market, really. It's been an interesting policy. And I think for some people in the equity market who are positioning for some kind of a respite or dovishness from the Reserve Bank, they were really disappointed. But what do you make of things? And I want to specifically ask you about the banks, because this ICRR announcement, incremental cash reserve ratio, that seems to have become a bit of an excuse, at least for near-term selling. What do you make of it?
Good afternoon. Thanks for having me on your channel. I would say that overall, if I were to look at this RBI policy, one of the things that I have been talking about of late has been that inflation is likely to be stickier than usual, and I'm talking globally, not just in India. And as a corollary of that, obviously rates might, in terms of coming down, might be a little bit stickier than what people anticipate. And hence, in that context, whatever came out in the form of RBI policy is not particularly surprising. The first respite, why we saw a bit of strong reaction in the equity markets over the last 3 or 4 months, is that rates have peaked, but rates coming down, in my opinion, will take a little while. So that would be how I would think about it more generally. With regards to the second question on banks, I would say that this is a short-term measure. Given that there's excess liquidity in the system, I think what RBI has done is basically taking a bit of liquidity out. So I think, I don't read too much from a long-term standpoint into this. They are doing what they are doing. I think on net balance, what you are seeing is a bit of profit booking across stocks, across sectors in markets, on the back of the fact that we've just had a result season which has gone by, and broadly earnings have been in line, and the stocks have done quite well over the last 3 or 4 months. That's how I see it, more like a fair value market with a bit of correction coming on because of profit booking, rather than, and the excuse being maybe today's RBI action, rather than this being the driver of the same.
So Trideep, in the last 1 month, which were the themes that you topped up your exposure on? What did you buy?
So I think one of the things that we liked in the last earnings season was basically the pharma results. And I think last time when I came across, we said that overall pharma as a sector earnings have normalized and could look a little better. That fortunately turned out the way we thought about. And I think during the course of the result season, whenever we found an opportunity, we have sort of added on to that. One of the hypotheses that we were playing in pharma for the last quarter or so has been the little bit of resilience in the United States generic market. And I think as we see more data points coming to that effect, we have kind of done a bit of top up, not a whole lot, but a bit of top up on the pharma names with regards to wherever there were gaps in what we held. So that's what broadly we have done on net balance. No significant changes. Maybe a bit of profit booking in capital goods, but that's about it. All in the fringes.
Right. Hi, Trideep. Good afternoon. Well, good to hear your views on a couple of sectors. But, the big sector for the Nifty is the banking names, and that's been underperforming. Now, some would say that it's giving a good entry opportunity because we are seeing a couple of banks, irrespective of what the numbers are, they don't react positively. Telling you the street is a little bit concerned about the near term. What's your view out there, and would you look at this as a buying opportunity, or would you stay by and say, well, we'll get lower levels, and that's when we look to get it?
Yeah, I think great question. I would say that, broadly speaking, lending financials are in a good spot for the next, over the medium term, i.e. 1 to 2 year perspective, because broadly asset quality worries are not there and credit growth is relatively decent. That still holds true. But if you go one level deeper, you also know that the NIMs of the banks or the banking sector have by and large peaked. And I think people, when they look at the results from this fine comb, are finding incrementally results are broadly in line or slightly the margins are slightly lower. I think what you saw of late in the last result season was a bit of reaction to that. I think there is a bit more to go, but that's more call it a midterm correction rather than changing the course is the way I would read it. So I will stay the course of lending financials being in a good spot. A bit of profit booking is in order, given that some of the best times in terms of NIMs might be, or net interest margins as they call it, is behind us.
And I think that's one of the reasons why bank stocks have been sulking of late. I mean, It's been a subdued earnings season in terms of just stock price movement. So Trideep, finally, I mean, what do you have your eye on? Anything new that comes to mind? I mean, at least some of the, let's say, the platform companies started reporting profits this time. Pharma, we've discussed, I mean, it's done really well. And also throw in a word on some of the big capex plays, because here stocks have run up a lot. Are you happy with the kind of results you've seen?
I think basically, so the answer is with regards to capex theme. Let's start the last one first. Is by and large yes. I think on net balance, expectations are reasonably high on those names, and what they have delivered is good numbers in terms of growth terms. But versus expectations, they were kind of in line to marginally better. There have been exceptions like the largest EPC company, this, that, the other. So we are a little more selective within industrials going forward, but nevertheless fairly positive on capex theme overall. We now have to juxtapose that with regards to the next 1 year, the elections coming up would be the kind of point that I would throw with regards to that sector. I think what we are keeping an eye on are basically overall how a bit of macro, but how the regional elections, etc., that from here till the year end are likely to pan out could cause a bit of macro volatility as it turns out to be. And with markets where they are, it's really more stock-specific nuances that we are focused on rather than those sectoral themes. I think those sectoral themes, by and large, are captured in the price. It's now within those sectors, if there are any pockets of mispricing, like the ones I talked about in the case of pharma, that's where money is to be made more. So that's what we are focused on.
Trideep, thanks so much for stopping by and giving us your view on a whole host of sectors that we discussed. Short but effective chat. Appreciate you stopping by. Well, for the time being, though, the Z Entertainment stock that was moving from circuit to circuit at higher levels, it seems